bond. Say in case of an EOU, it could be a B17 bond. In other exporters, if they are already with the manufacturer exporter and having a bond with the central excise authorities, those would also be applicable till 31st July. And that means you have enough time to come with a fresh LUT or bond. Now, the authority before which this bond is to be filed would be the jurisdictional AC or DC, Assistant Commissioner or Deputy Commissioner of GST. Under GST, there will be a division of suppliers. Some could be under the state government, some could be under the central government. For exporters, it has been left to the exporter himself to take a call where they want to register themselves, at least for the time being, till the clarity on this division of assessees takes place. There is a provision that many of the state governments were not dealing with the exporters, so if the commissioner of a state GST thinks that all this bond can be filed with before the central tax authorities, they can pass this instruction, and in that case, all the exporters necessarily can come to the central government officials dealing with GST to take this bond. Maharashtra has become the first state which has already passed an instruction that in case of Maharashtra, all the bond will be filed before central GST authorities. Yeah, I said in my introduction, refund plays an important part, and we have worked a lot almost for last 1 year. So the provision which you see has not come out. In fact, there's a gradual incremental progress which we have made, and we have reached up to this stage. Refund provisions are given in section 54 of the Central GST Act. Refund can be claimed within 2 years from the relevant date. That means 2-year time is given, so there is no hurry in case there are some other issues coming. For United Nations, multilateral institutions, embassies, this is only 6 months. It does not make too much of an impact, because 2 years is for Indian citizens and Indian firms, and these for 6 months are the firms or entities which are generally not Indian. The relevant dates also we have said in various categories. For exports going by sea or air, the date on which the ship or aircraft leaves. For exports by land, the date on which goods passes the frontier. For exports by post, the date of dispatch of goods by post office. In case of deemed exports, a refund of tax is paid available the date on which return related to such deemed export is filed. In case of refund of tax paid or ITC on services exported out of India, services and goods, there's a bit of a difference. In case of services, it would be date of receipt of convertible foreign exchange, where supply is completed before receipt of payment. And in case of the payment has been already received in advance, then it will be the date of issue of invoice. In case of refund of unutilized input tax credit, the end of the financial year in which such claim of refund arises, that is inverted duty structure. In case of court order, the date of communication of such court order to the GST authorities. In case of a person other than a supplier, the date of receipt of goods, and in any other case where clarity is not there, the date of payment of tax. These are the dates from which the 2-year period would start for filing export claim. Refund of balance lying in the cash ledger, that means the electronic cash ledger maintained with GSTIN would be allowed in the return itself, so one doesn't have to file a separate claim for getting that money. No refund if goods exported out of India are subjected to export duty. There are certain goods which attract export duty. In that case, there is not going to be any refund. There's a question of an unjust enrichment. That means whether the tax which you have paid may have been passed on to somebody else, and you may not be unjustly getting enriched. So, but in case of an export, this provision will not attract, and we will not go into the question of an unjust enrichment in case of export. 90% of the total refund amount in case of export, that is zero rated supply, would be given within 7 days of acknowledgement. That is provisionally, within 7 days of your filing of refund claim, 90% of the amount would be given. The acknowledgement is that an exporter coming for filing of a refund, it has to be seen that it is accompanied by, it has ticked all the boxes, has followed a proper, the documentations have been given. Within 15 days, the government is bound to give an acknowledgement. If nothing comes within 15 days, it is deemed that the government has accepted. However, the date of your counting, that because we come to 60 days also, will start from the day an exporter has filed his refund application. So even if acknowledgement comes say on 13th day or 14th day, those many days have not gone waste. They'll get counted as far as the 60 days is concerned, but your 7 days start from the date of acknowledgement. Max, 15 plus 7. You will appreciate that, I'll come to these provisions, that unless your GSTR 3 return is filed, that is the time you will pay taxes, right? Unless you have paid the taxes, the refund cannot take place. So this starts from filing of your return. So at least it has to be monthly. It cannot be shipment wise. I'll come back to it. I think if you allow me to complete it, many of those things will be answered. Rightly so, because if you have already paid IGST, which is the final, then you are utilizing that very credit. So the credit of ITC lying on account of inputs cannot be given, because either you take this or you take this. Now, a refund order is to be passed within 60 days of the date of receipt of application, complete in all respects. I clarified that. And for refund beyond 60 days, an interest rate of 6% would be paid by the government. In case a refund is originating out of an appeal or a court order, and then if the government still delays beyond 60 days, this 6% will become 9%. The reasoning is that his exporter is already coming through a judicial process where he had to possibly get his refund. If again more than 60 days the government is taking, then the 6% becomes 9%. Refund will be online. Application for refund is to be filed in the form GST RFD01 electronically on GSTN. In case of zero-rated supply, application for refund after export manifest or report, and in case of SEZ, after full admittance of goods as certified by the specified officer or authorized officer. Formula for refund of ITC in case of duty-free supply under bond. In case of zero-rated supply would be, the refund amount will be calculated, turnover of zero-rated supply of goods plus services divided by adjusted total turnover into the net ITC available. That will determine the quantum of refund which is available to an exporter. The documents which will be needed for refund is a statement containing number and date of shipping bill or bill of export, as the case may be, number and date of relevant export invoices in case of goods. In case of services, it would be statement containing number and date of relevant export invoice and the relevant BRC or FIRC, foreign inward remittance certificate. That's the money must come back in case of services before the refund can be granted. A reference number and a copy of the order of an appropriate authority based on which refund claim originates. The number third is if it comes on account of a court order or a tribunal order or a commissioner appeals order, then the copy of that order is needed. We have a very special provision for refund of IGST. That means an exporter which does not make use of the facility of an LUT or bond, but likes to pay IGST and export the goods, then this exporter need not formally apply for a refund. His shipping bill application itself would become a refund application, and like in case of drawback, it would automatically be credited to his account which he has given at the time of his registration. How it will work is that the shipping bill filed by an exporter shall be deemed to be an application for refund of IGST. Such applications are deemed to have been filed only when, so must fulfill this condition, that the person in charge of conveyance carrying the export goods duly files an export manifest or an export report covering the number and date of shipping bills or bill of export, and this answers whether it can be shipping bill wise, that an application has been furnished of a valid return in form GSTR 3. So only a refund can originate once a return in form GSTR 3 is filed by an exporter. The details of relevant export invoices contained in the form GSTR 1 shall be transmitted. That means whatever you are filing the return, the first return GSTR 1 with the GSTN portal, that gets transmitted to the customs EDI. The customs EDI relates it with your shipping bill and invoice and sends it back to our GSTN portal. Of course, an exporter doesn't need to understand any of these things. These are our own internal process. But this will tell clearly that the goods have been exported. And once the GSTR 3 comes, we start processing your refund. Your refund goes in your account, which you have already given it to the government. How the scheme would work in SEZ under GST. In fact, SEZ is the least affected scheme in GST. Its zero rating status has been kept intact. The registered supplier from the domestic side exactly gets the same facility as if he is exporting the goods. That means he can send under an LUT or bond without payment of duty to an SEZ developer or a SEZ unit, or he may pay IGST and then claim its refund from the tax authorities. Similarly, import of goods and services have been made duty-free, including IGST in case of SEZ.
In case of SEZ, can you just briefly explain the process of refund if we are paying the IGST?
If you are paying the IGST, because it is not online as of now, the SEZ online doesn't speak to GST again. So it would be just a manual process. Only to that extent it gets a bit changed. Because the customs EDI is linked to GSTIN, the SEZ online is not linked to GSTIN, so it's only that minor thing would be there. Otherwise, make use of LUT or bond and send the goods. Okay? Yeah. How EOU scheme would work here, a major change has taken place. And this is very important for you, whosoever deals with EOU or are having an EOU or are working for an EOU. This has undergone a major transformation. As of now, they are standalone manufacturing units. I'll just take you through how they work today and how they'll work. I mean, today means until 30th of June. Now that. So they are still as standalone manufacturing units. The custom bonding, which was there, has been done away with much before the GST came. To be precise, on 29th of July 2016 itself, almost a year before GST came into being. So there is no bonding of EOU now. There are essentially three notifications. Notification 52 of 2003 allowed duty-free import. There is this notification 22 of 2003 that allowed duty-free procurement from domestic area for an EOU unit. And there is another notification 23 which allowed how if they clear goods in GTA, if an EOU clear goods in GTA, what would be the tax treatment to such goods. What happens now? So notification 52 has been amended by notification 59 of 2017. For your purpose, what it says is that as far as the custom duty goes, it would still be nil. But IGST, an EOU importer will have to pay and take its credit, ITC. Same thing happens with an infrastructure service provider. An infrastructure service provider, people in the service industry would know, especially IT industry, that they also used to get full customs duty as well as the then countervailing duty, which was leviable on such capital goods. Now they will also get only BCD and pay IGST. DTA sale will be on the payment of applicable taxes under GST. That means an EOU will clear the goods exactly same way any other manufacturer or supplier clears in the country. That means he will pay either CGST, SGST, UTGST or IGST if it is an interstate. However, because he has imported the raw material duty free, which is the BCD, which is not available to a domestic manufacturer, the raw materials which he has imported duty free, he'll have to reverse the BCD contained in such raw material, and that will be as per the CON or the norms fixed by the norms committee. The procedure which they will use is that they will follow the procedure as prescribed under Rule 5 of the import of goods and concessional rate of duty. New IGCR rules have come, please go through them. Rule 5 is more appropriate for EOU. Procedure for procurement certificate is now no more will be in operation. We used to have pre-authenticated PCs or not so pre-authenticated procurement certificates. We have done away with that. B17 bond would still be relevant. We'll count that bond for continuity bond because the bond will still be needed for BCD. And they still need to be NFE positive to make domestic clearance. The duty drawback scheme, as on date, it neutralizes the central taxes, till 30th of June, central duties, taxes chargeable on import or exciseable material used or taxable input services used in manufacture of export goods. It was drawing power from Section 75, Section 37 of the Central Excise Act, and Section 93A of the erstwhile 94 Finance Act 1994. It used to have both all industry rate or brand rate. And we were not allowing drawback if the neutralization of the duty has happened through the Senvet credit, rebate or duty-free procurement. And the state levies were not being taken care of as far as the drawback was concerned. How it will work now? Now, drawback is still very much there. It is a central government scheme. It is not with the state government scheme. All industry rates will be determined by the central government on the recommendation of the drawback committee. Drawback committee has always been there, even pre-GST. Whatever drawback committee recommends, those would be the rates. And the drawback committee would base its recommendation on the basis of the BCD and the central excise duty on select petroleum products under all industry rates, and brand rate will be available. And of course, this will be besides the refund of CGST, SGST or IGST, which will separately can take place. There is a period of 3 months which has been allowed for drawback, that the people who have been doing their business for another 3 months, they can do as usual, can take composite rate of drawback as they were taking. However, if they do so, they will not get any of the refund of CGST, IGST, UTGST or SGST. So please have this in mind. Neither they can take input credit. That means whatever the conditions under which was available to them composite rate, only that would be available. Some exporters are now coming and saying, look, drawback is the central government scheme. Can I now at least take SGST? No. This is only a transition for 3 months because exporters said they will have the difficulty in switching over to the new system. So they can take as per old system, but then no refund would be available during that period. With effect from 1st October 2017, drawback shall be restricted to the customs duty on imported inputs and central excise duty on the petroleum goods, which are not under the GST, which I have already clarified. Now, EP schemes, we used to, DGFT issues the MEIS and SEIS scripts. These scripts will be allowed now only to pay for BCD. They will not be allowed to pay for any of the GST taxes, neither central nor state nor UT. Advance authorization, again, exemption only from the basic customs duty. An AA holder will have to pay IGST, take input tax credit, and after export, claim refund of any unutilized input tax credit at the end of the tax period. DFIA, there is no change because only BCD used to be exempted, which will continue to be exempted under GST regime also. EPCG, exemption only from the basic customs duty. The IGST on import of capital goods and will have to be neutralized through input tax credit. Thank you very much. Now I think Yogendra, you want to add anything? It's okay.
Sir, a question regarding conversion of foreign exchange into Indian rupees for payment of IGST. The reference rate is given by, as given in the policy is the foreign exchange to be converted as per the reference rate given by the Reserve Bank of India at the time of removal of the goods from the factory. But when the goods reaches at the port, the same foreign exchange value will be converted by the custom duty rate declared by the customs.
I got your question, so please let me answer it. In case of goods, the rate would be the customs rate, not RBI rates. And in case of services, it will be the RBI rates. The government either would have done it by this evening or is going to clarify that. Okay?
Thank you very much.
Ladies and gentlemen, before we move to the open house session, let me inform you that Mr. Yogendra Garg, Commissioner GST, has also joined us. And now I request Mr. Rakesh Suraj to kindly present flowers to Mr. Yogendra Garg. Thank you very much, sir, for joining us. Now the house is open for question-answer session, and I would request Mr. Pradeep Agarwal to kindly moderate the session.
Yeah,
Sir, my question to you. As we are talking for the transition period of 3 months, July to September, wherein on the request of the exporters, as you said, you allowed them to take the full drawback subject to the condition, number one, they will not carry forward their central excise or CGST credits on the stock as on 30th June. Am I correct here? Number two, for the 3 months, July, August and September, whatever inputs, raw materials they purchase, they'll again not take any SGST, CGST or IGST credit on them?
See, as an institution, an exporter is not barred from taking. About those goods we are talking. With respect to the goods in question on which you have claimed drawback, the double benefit should not be there. Only
Fine.
that much the government is trying to achieve.
Fine, I've understood that, but the point is, how do we make the assessing officer satisfied that on these many goods that we have exported in these 3 months and taken full drawback, we have not taken the credit, and the credit lying is for the other goods?
We thought, let me clarify in this open house that it would be better that if we restrict ourselves to larger policy issues, these are the issues which will be more at an assessment as GST Seva Kendra or the Assistant Commissioner or Deputy Commissioner would be able to answer. Should not be too difficult, this thing.
Yeah. At least, so let's understand, at the moment what we have done is we've created an enabler. Okay. So in the drawback rules, an enabler has been created through notification. A procedure has been set. How that credit is going to get denied, how to verify, those are all, I'll say it's work in progress. Okay, we have moved into a new scheme, a new regime actually, there's a fundamental change on the way indirect taxes are being handled now. So to enable, instead of creating a chock-a-block situation where exports are not happening or the rates are not available, we said let's in the interim start with a 3 months moratorium. With the condition, the baseline is very clear, that double benefit should not be available. Okay. How it is going to get panned out, how do I monitor, how do I ensure that in the GST and your credit ledgers don't get credited? That is something which is work in progress. We'll be definitely coming out with the schemes. Let's not preempt. Abhi, at the moment, I would advise that please go through. There's already a provision that if in case the certificate is not available, you can file a lower rate shipping bill. And when the certificate becomes available, you file a supplementary claim. That's all is available. So there is no, I hope there is no disability when carrying out the export business. And as we progress, the final print will tell you what rules are there.
Sir, one question relating to this only. The drawback used to cover the central taxes, not the state taxes. So we used to get the state taxes separately as a refund. But as we understand in drawback, if we take full amount of drawback, then even the SGST will not be available, or will it be available?
Let's understand we're working out. If you read the text, there's a notification 59 by 2017 non-tariff of customs, which has made the amendments. That blocks only the IGST and CGST credit. If you look at the essence in the text, this SGST credit has not been blocked. But that mechanism has to be set in as to how do I create, and on the same transaction, we populate your SGST credit, but not populate your IGST and CGST credit. So working through motion,
yeah, so
while in theory your argument is very well taken.
Very well. So, okay, thank you. That makes a big difference for us.
Excuse me, sir.
No, I'm only.
So
No, let me just clarify. I'm not. Please don't take it that yes, SGST shall be available. I'm saying at the moment the text blocks only the IGST and CGST.
Yes, right.
So from that it does appear that as if there is a possibility that
SGST is available. Yeah.
But let the final process emerge.
Sir, but you know, for us as a costing, it becomes a big difference if we come to know SGST is available or not available as an exporter. So if somehow this process can be hurried, at least to clarify, we are not talking of the process can come later, but if at least we are clarified that SGST is available to us as a refund, as ITC, even if we take full drawback. That's our request to you, if it can be done.
Sure.
Yes,
Sir,
sir, can we go one by one, please? So, yes. Can you please get up and then speak a little louder?
So GST is in place, and now the major thing is that the exporters start executing exports under the GST system, not as per provisions you have laid down for till 31st July. So as I understand, we were having a discussion. What I understand is now, when I release a shipment for export, I raise two invoices. One is a commercial invoice for the buyer, and which is in foreign exchange, and second is a GST invoice. With a GST refund, I pay the GST, deduct the credit from my balance, and submit the shipment for export like we were doing earlier, right? Is it?
That's correct.
Yeah. And then, as I understand from your presentation, automatically when we file for export and we execute the exports, shipping will be generated based on the information given in both the documents. And then we do not need to do anything further. And the drawback, like earlier it used to get credited, as well as the GST component, 90% of the component will be credited automatically. We don't need to pursue anything. Documentations have been submitted. This is what I understand now.
So now the question here is, what happens? There are two ways of the refund. One is when one pays IGST, and that is his question, that he has paid IGST, will it be automatically refunded to his credit account? The answer is yes. Also, the requirement is that please file your GSTR 3 return or 3B.
Next month.
Unless that return comes, and there is no 90% provision in IGST. The 90% provision is only when you go for input tax credit of your raw material.
So this is 100%.
Here you get 100%. So the advantage here is that this will be much faster than the process which has been envisaged in the first instance. And there you will have to file for a refund application. Here you don't have to file for a refund application.
So practically, if we see the time period is, because suppose if I clear it on 1st of July, so I'm going to file my GST return on 10th of the next month, that is 10th of August. So it's going to be 7 days from 10th of August.
GSTR 3 would be around 20th of August.
20th,
So, your,
sorry.
so that is, your understanding is correct.
So I will get my refund by 27th of August.
7 days of what? I mean, maybe it could be 2 days, maybe it could be 3 days. As soon as you file GSTR 3, the custom officers working on the EDI would be in a position to release your 100%
So by
IGST.
say end of August, I should have the credit.
Usually, I mean, that's how the drawback takes place. Maybe a day, maybe 2 days. So
So if I ship it on 1st of July, it is 2 months. And if I ship it on 31st of July, then it is 30 days.
I mean, let's see it this way. You can get only refund of the taxes which you have paid. You have paid taxes only on 20th of August.
But
Right. Otherwise, what you have done is, through credit ledger and all that, you have only
No,
utilized
I
it. When the
differ.
return comes,
I differ here, sir. We have bought the parts, we have bought the goods, and we have paid the GST on that. And it could be it could be a month before. We also need to process the goods.
agreed. So you are now on blocking of working capital for your time. How much time it will be blocked, you are correct. Working capital, for how long will it be blocked on account of taxes? Yes.
Let me just take a few minutes more. It's not just about blocking funds. Now, from the commercial point of view, just take it from the commercial point of view and a personal point of view. I'm not disputing policy and I'm not raising anything. Now, as an exporter, as a foreign exchange earner, I'm supposed to accept an order from a foreigner at a lower price than I know I'm going to pay. Then buy the goods and pay for everything much below than what I'm going to get paid. Make all the payments, execute the shipments, and then for 2 months, wait for my some margins for my profitability, for my overheads to come,